video we will see about SA 200 and SA 210. So in this we will see about SA 200 and SA 210. SA 200 is all about overall objectives of the independent auditor and conduct of audit in accordance with standards on audit. So here we are discussing about the overall objectives of auditor. What is the primary objective of auditor? One is to report on the financial statements. To report on the financial statement where the financial statement are free from material misstatements, whether due to fraud or error, and to give a reasonable assurance that financial statements are free from material misstatements. And then ultimately what do? You report on the financial statement, you issue a written report, and that report is called as independent auditor's report. And you communicate as per the required essays. For you to give reasonable assurance, what should you do? For you to give reasonable assurance, you have to perform the audit procedures, you have to obtain audit evidence, you have to draw conclusions from the same on which you can base your opinion, and then finally you can issue a written report. You have to perform audit procedure, obtain audit evidence which has to be sufficient and appropriate audit evidence so that you give a reasonable assurance that financial statements are free from material misstatements. Now why can't you give an absolute level of assurance? Generally, in audit, even if you plan and perform the procedures in accordance with essay, you will not be able to give absolute assurance because audit risk is something that you can never reduce to zero. But you can reduce this to an acceptably low level. Now why is it so? Because generally, even if you plan and perform everything in accordance with essay, there are some limitations in audit. Like for example, nature of financial reporting, because management is preparing. So management judgments are involved. So that might be one reason why we might not be able to reduce audit risk to zero. And there's also another risk that you have to balance between time and cost. For example, you're performing the procedures since the past few years and you take that information in the previous year, but that might be wrong. So that can be one information, that can be one issue, or it can be due to other reasons as well. Like for example, if there's any fraud or related party transaction, you might not be able to identify this because of sophisticated and carefully designed schemes. So that might be one reason. Generally, you will not be able to reduce audit risk to zero. So you have to bring reasonable assurance, which is again a high level of assurance. But again, reasonable assurance does not mean absolute assurance. That is, you cannot reduce the audit risk to zero. That is basically, this is a primary objective of auditor, to report on the financial statements. The requirement of this essay is that you have to comply with all the ethical requirements, including independence. You have to comply with independence, objectivity, professional competence, professional judgment, professional skepticism, confidentiality, and others among independence. So objectivity means you have to stay objective. That is, you should not be subjective. You should be unbiased when conducting audit. So that's why audit is referred to as independent audit and the report is referred to as independent auditor's report. Professional competence meaning when you're performing audit, you need to have the necessary competence, capabilities and skills to perform the audit. Professional judgment is basically you apply skills, training, knowledge and experience to perform the audit. Professional skepticism is nothing but you need to have an attitude of questioning mind. That is, if at all there's any conflicting or contradictory evidence or potential, or you suspect any potential area of fraud or misstatement, you will have to be very skeptical. And confidentiality means you have to secure client's information and you should not tell client information everywhere, and you have to be confidential in that particular area. Except for in few cases wherein client is involved in maybe any fraud, and if the regulatory authority or laws requiring you to disclose that information, then you will have to. In other cases where client allows you to and the situation requires you to disclose, then you can disclose. But otherwise you should not disclose. Then you have to obtain sufficient appropriate audit evidence. Sufficiency refers to quantity. Sufficient quantity. Appropriateness refers to quality of audit evidence. And then you have to comply with all the essays, use objectives stated in the relevant essay. So the main objective of this essay, essay 200, is that you have to report on the financial statements. And for you to report on the financial statements, you will have to perform audit procedure, obtain sufficient appropriate audit evidence, comply with all the essays, and you have to exercise professional judgment to comply with all the ethical requirements, including independence, objectivity, competence, professional judgment, professional skepticism, confidentiality. You have to comply with each and every requirement in essay. If auditor fails to achieve the relevant objective as stated in essay, modify the opinion or you can withdraw from the engagement. So if at all you're not able to achieve the relevant objective, then in that case what do? You modify the opinion. There are basically two types of opinion. So again we will see in detail over here. So there are two types of opinion that an auditor issues. One is unmodified opinion and other one is modified opinion. So modified opinion again can be classified into three categories. Qualified opinion, adverse opinion and disclaimer of opinion. So we will see in detail in essay 700 and essay 705. So this is an overview about essay 210. Now coming to part of essay 210. So this has been overview about essay 200 that we were seeing earlier. Now we will go to essay 210, which is agreeing to the terms of audit engagement. So agreeing to the terms of audit engagement means the auditor and the client whose accounts we are auditing, they will have to agree and there shouldn't be any misunderstanding of terms. So for that we need to ensure two main criteria. One is preconditions, other one is common understanding. Preconditions of the audit will have to be present before we accept the audit engagement. And there should be common understanding between auditor and management. To ensure there is a common understanding between auditor and management, we issue them. Auditor issues a management engagement letter which will have 5 main details. So audit engagement letter will comprise of, first thing is what is the scope of audit, what is the nature of audit, what are the objectives of the audit. So this will be included in the audit engagement letter. What are we going to do? And our responsibilities when it comes to audit. As we will perform the audit in accordance with essays, that we will comply. Two main things being we will perform the audit in accordance with essay and that we will comply with all the ethical requirements including independence. Our responsibility and management's responsibility. So this will be included in the engagement letter. Apart from that, identification of applicable FRF. Now what do you mean by applicable FRF? FRF is generally a framework that the management will use depending on their nature of business, their nature of entity, size of entity. They will be adopting the FRF based on this they will prepare the financial statements. So it has to be applicable FRF. Applicable FRF is generally FRF which is applied to that particular entity. And at last we will also include form and content of the audit report that we will be issuing and also a statement that this might differ. You will be including expected form and content of the auditor's report. So audit engagement letter will contain 5 main details. One is objective, nature and scope of audit, responsibilities of auditor, responsibilities of management, identification of applicable FRF and form and content of auditor's report. Now what are the preconditions? So before we accept an engagement, see again audit engagement can be of two types. It can be a new engagement or it can be an existing engagement. In case of new engagement, the term is accept. You will accept the audit engagement. In case of existing engagement, you will decide whether to continue or not. In case of new engagement, you will decide whether to accept it or not. And you might decide to accept or not to accept. In case of existing engagement, you will decide whether to continue or not. So you might continue or you might choose not to continue with the audit engagement. And then what are the preconditions? So before we accept or continue the engagement, we accept the new engagement or continue with the existing engagement, we will have to ensure 2 main things. One is whether preconditions for audit are established and whether there is common terms of understanding between auditor and management. What do you mean by preconditions? There are totally 2 main preconditions that we will have to ensure. One is FRF, applicable FRF that the management is using, is adopting in preparing the financial statements will have to be acceptable FRF. That's one thing that we will have to ensure. And the second thing that we will have to ensure is an agreement with the management. So we have to ensure that the management is agreeing that they understand and accept their responsibility. Now their responsibility will fall under 3 main things. One being they have to prepare the financial statements as per applicable FRF. So we know that who is responsible for preparing the financial statements? Management. Who is responsible for auditing the financial statements? It's auditor. So management will have to agree and acknowledge the responsibility with regard to preparation and presentation of financial statements in accordance with applicable FRF, and also for devising internal financial controls and to provide auditor, for auditor to audit the financial statements, to provide auditor with all information and additional information and unrestricted access to persons within the entity, so that he can inquire any person, and if required he can inquire and obtain information from them. So two main things to be ensured before we accept or continue with engagement. One thing, preconditions, which includes two main points. Applicable FRF will have to be acceptable, and second is management will have to understand and acknowledge your responsibility with regard to preparation and presentation of financial statements, devising the internal financial controls, and to provide the auditor with access to all information, additional information. Second thing being, so once preconditions established, there will have to be a common understanding between auditor and management. For that, auditor will be issuing management audit engagement letter, which will include 5 main details about audit, about our responsibilities, their responsibilities, identification of applicable FRF, and forming content of auditor's report. Now, there's a question whether audit engagement terms can be changed. Now, it totally depends. If there's a reasonable justification of doing so, then in that case, management and shall mutually agree to the new terms, and then they will have to prepare a new document in writing. If there's no reasonable justification, then what the auditor can do, can withdraw and report to TCWG. There's a difference between TCWG and management. See, management is generally all the people in management. So include sales manager, purchase manager, all of them. Whereas TCWG is that part of management who are responsible for financial reporting process. Example, board of directors, audit committee, etc. So in this case, if there's no reasonable justification, we have to withdraw, and then we have to communicate the same to TCWG. Thank you.